Hi, this is Shankar Sharma. In this video, I want to talk to you about at&t. So at&t has come out with results. Let's examine and see if at&t is it's got any reason to give us a buy signal or a sell signal or a hold. Let's see what it is telling us. Let's jump in and dissect the numbers and analyze this stock in every possible way we can think of. Welcome back. Let's jump in and see what at&t is telling us. So I'm going to take you straight to the financials. Let's dissect them and see where it is taking us. If you look at the at&t, first of all, I would like to look at the price to earnings ratio, which is 12.35, which makes it, because it's less than 25, it makes it cheaper. That's a good sign. It's in the telecommunication sector, which could be the next sector that is going to take off, and it's communication sector, and industry is wireless telecommunications. It has primarily four segments it operates in: business solutions, entertainment group, consumer mobility, and international, according to its own documentation. Let's look at the financials. So if you look at the financials, we can see net income has improved compared to last time, 3.44 to 3.60. Net margins have improved, which is very good. They get 2 points right away, right off the bat. And then if you look at debt, which is quite normal for technology company, and if you see the cash equivalents have dropped a little bit. And if you look at the financials, interesting thing is the net margins have improved compared to last quarter. Net income is also improved, which is interesting. But net revenues dropped a touch. So that's interesting to know. So it's got 2 out of 3 marks there. Here, debt is still higher but reduced. Free cash flow has improved. Cash equivalents have dropped a bit. So they're doing something to contain the debt, which is good news. Now let's go and jump in and see the cash flow. So if you see right away, the picture speaks 1,000 words. Cash flow from financing activities were positive in 2022 for some reason. It kept going down. And if you see, it's still down, minus 5.48 billion as of Q2, which is June, quarter ending June 2024. Cash investing activities are also negative, but cash from operating activities are positive. That has improved by 2 billion, which is excellent. If you come to free cash flow, there's a bit of drop in free cash flow. So they must have either put it for operating activities or investing activities or financing activities. We don't know, but these two are showing negative. That is also showing negative. Overall is showing cash flow year-on-year growth is negative, which is not good if it continues this way. It's got to be turned around very quickly. Now let's look at revenue figures. So if you look at last year figures, there's a bit of a drop on corporate income last year, and improved income from Latin America, communications, consumer wireline is still there, improved. Wireless has dropped a bit. Mobility has increased. So they're primarily focusing on mobility, looks like. If you take a country-wise look, it's in few countries. It's improved in United States, improved in Mexico, improving, not improved that much in Asia Pacific Rim, Europe, a drop, Latin America 194, a drop, others a drop. So what it means is at&t is prone to geopolitical tensions. That is one thing we got to remember by looking at those details. If you look at the earnings are positive, which is excellent. If you look at the revenues kind of miss last 3 quarters. That's not good. And earnings been alternating positive, negative, positive, negative. So they need to bring in some stability. They pay a good dividend, 5.16%. So that's not bad. So overall, if you look at pre-tax income, it's been negative for a couple of quarters. Net income's been negative, but EBITDA growth been positive up until now. That turned negative. EBIT growth. EBITDA is still positive. So there is some work to be done. So if you look at the assets and liabilities, total equity is positive. That is great news. It's positive by 121 billion, which is excellent. That is improving quite drastically. So if you look at this figure, which is their assets, what they have in pocket compared to what's going out, what they have in the pocket is a lot higher. So that is very healthy sign of a company. So overall, it's not doing flamboyant way. It's not hitting it out of the park, but it's okay. It's in a stable place, but there's still a lot of work to do. Especially we need to see positive revenue and operating income coming back and turning into positive. We want to see pre-tax income turning positive. We want to see net income turning positive, and we have to see all those in the coming quarters. So overall, it's okay, not super exciting, but it's okay. It's got money to pay its bills. That's what matters, and which means it can buy time, and it also has to work out, how to be positive around the globe with its locations all over the universe. Now let's look at the chart and see what chart is telling us. Chart is telling us if you stay above 20 to 50, there is a fairly good chance that in the coming months, it could head off to 24.95 or 25.60 area. So that is what chart is telling, which is positive for AT&T. I wouldn't chase this stock right here. I will wait for the price to come down, maybe closer to this trend line. If it holds there, then probably that's a good place to enter. Do not chase a stock, and you can always wait and let it come to you, and then consider it. As good dividend, it's okay, it can pay its bills, but I would like to see more spark in the coming 2 quarters. I would expect AT&T to shine a bit more than it is currently doing. So hopefully that's useful. And don't forget to subscribe to this channel and leave a positive comment. Thank you so much for your time. See you in the next video. Bye for now. Sankur Sharma signing off.